So if you have questions on anything I went over, write down your questions in the little box where it says questions. And we're going to take the rest of our time and I'm going to go through every one of the questions, or as many as I can, and answer them. And if we don't get to every question today, I will answer the questions and send them to you via email. First question, do you have any suggestions for things to consider when transitioning from medical to a private covered California plan? Well, again, with covered California, the only reason you would want to go through covered California is if you're going to qualify for a subsidy. And we spent a lot of time on all the documentation you need to provide. And if you're not sure what your modified adjusted gross income is, call your accountant and ask your accountant to calculate what your modified adjusted gross income is for this year and to help you project what you think it will be for next year, because that will determine if covered California is a good fit for you. Next question. I have COBRA insurance. Why a 10% increase when went to COBRA? HealthNet is what I have and was through work till disability termination. Okay. I think I know what you're asking there. When you go to COBRA, there's two types of COBRA. Cal COBRA, where if your employer had fewer than 20 employees, you go to Cal COBRA. If your employer had over 20 employees, you get federal COBRA. With Cal COBRA, you deal direct with the insurance company, and they automatically add a 10% administration fee to whatever the total premium is. If your employer had 20 or more employees, you send your money to your former employer each month, and they can add up to a 2% administration fee onto the cost of the premium. Next question. Have 3 years guaranteed COBRA, right? Same rate is or was. If okay to go back to work on the day, we'll see work insurance option or leave. Not quite sure what you're asking me here. You have 18 months of COBRA. If your former employer is a California-based company, you can get an additional 18 months of Cal COBRA coverage, but every year that premium is going to increase. And, so basically you don't need to stay on COBRA, because in today's world, you have guaranteed issue coverage in the individual market, and you might be able to get coverage at a lower cost. So if you're currently on COBRA, when we have a one-on-one telephone call, we can discuss the options and determine if you're better off continuing with COBRA or dropping COBRA and enrolling in an individual plan. Next question. Anything less expensive or better versus my healthcare current situation? Well, every insurance company is going to have a rate increase come January 1. The carriers are being very secretive about how much their rates are going up. We are anticipating that premiums are going to go up anywhere from about 15 to 25% for next year. So what your choices are, you can keep your current plan and just pay the higher premium beginning January 1st, or we can look at other plan options. But with every insurance company raising their rates, your new rate, even though it's going to go up, might still be very competitive. So keep that in mind. Next one, Congress is frequently trying to repeal the ACA. The Senate something, I can't tell what you're asking. There is a new Senate majority. Do you anticipate changes in the legislation in our near future? Well, here's the problem that we're dealing with. Beginning in January, the Republicans will control the Senate and the House of Representatives. And if both houses pass a bill, it still needs to be signed by the president. And the president has the option of signing a bill or vetoing a bill. If the president decides to veto the bill, it takes a 2/3 majority in each house to override the veto. The likelihood of them getting a 2/3 override is not very good. I think what you might see, what the Republicans' point of view has been up to now is making minor fixes to Obamacare to make it work was not their goal. They wanted to totally repeal Obamacare. Obviously, that still is not going to happen. So their only option is going to be to try to come up with some fixes, and then we'll determine if the president is going to sign those bills or veto them. We don't know at this point what's going to happen. You spoke about something. You spoke about the 400% of the federal poverty level and the complexities of being on the edge. How about the other edge, which is where I am? Thanks. If your income is right about 139% of the federal poverty level, you will qualify for a subsidy. But here is the problem that we're dealing with. Every April, Medi-Cal raises their limits to qualify for Medi-Cal. So if you're right on the border right now at that 139%, and all of a sudden the minimum threshold to qualify for Medi-Cal goes up even $500 or $1,000 a year, you are going to be dropped from Covered California and re-enrolled into Medi-Cal. And that happened to people this year. So if you are right on the border and you're okay with having Medi-Cal where they pay 100% of your premium, then great, you can enroll in Medi-Cal. But if you're going to enroll in Covered California with a subsidy, then you have to be prepared for being moved to Medi-Cal come April. Next question. Just wanted to confirm my understanding of the Silver Plan RX for non-generic RX. For a family of 3, would all 3 of us need to fulfill the $250 deductible before one of us is eligible for the $50 copayment? Good question. Once a family member reaches the $250 deductible, then that family member will start paying the $50 or the $70 copays for the remainder of the year. But the other family members will continue to pay 100% of the cost of their drugs till they reach that $250 deductible. And let me take it a little bit further. Let's just say, for the sake of example, you have your health insurance plan with Anthem Blue Cross and you get your prescriptions filled at Rite Aid. Whatever Blue Cross's negotiated rate is with Rite Aid is what you will pay. So if you get a drug and the pharmacist says our retail cost for this drug is $100, but our negotiated rate with Anthem Blue Cross is $60, then you will pay $60 and get $60 of credit toward your $250 drug deductible. But each family member has a separate drug deductible before they're eligible for the $50 copayment. During this first year of affordable insurance, as you shared, most plans had very small provider networks, so we opted for Assurant Health. Does it seem like Assurant's Aetna's provider network size will remain intact? Actually, it's a very good question. For 2015, Assurant, who is using Aetna's Signature Administrators Provider Network, will continue to have 60 to 70,000 doctors in all of the major hospitals. All of the other carriers will have a smaller provider network. HealthNet, for people who are enrolling in Covered California, is going to what we refer to as a narrow provider network. That means they're going to eliminate the more expensive hospitals like Cedars and UCLA, and the medical groups like the Cedars-Sinai Medical Group and the UCLA Medical Group. So when we meet one-on-one, we're going to have to determine if one of those other carriers is going to be a provider for the doctors and hospitals you want to go to. Do plans that are part of Covered California offer more benefits than non-Covered California plans? And is there any benefit to signing up for a Covered California plan versus a non-Covered California plan? The benefits are identical. The premiums are identical. The only reason one would go to Covered California is if you qualify for a subsidy. Otherwise, you are much better off just getting your plan direct from the insurance company. So the benefits are the same, the premiums are the same, and I dare to say access to providers is supposed to be the same, but many doctors are refusing to cover folks that have the words Covered California on their insurance card. Do plans that are part of Covered California offer, it looks like that's the same question. Okay, let me see if there's anything else. All right. If you have any other questions, just send me an email. You can email your questions to david@dcbins.com, and I'll be happy to answer them. I see one more question here. I recently had a car accident. I have MetLife auto insurance with 5K coverage for my own injuries. However, I was turned away by providers because they no longer accept direct pay from the car insurance companies. Well, if that's the case, then you want to just use your medical insurance and get treatment, and then you can have your auto insurance company work that out with the other insurance company to deal with the reimbursements. Keep in mind, if your health insurance company pays a claim and the auto insurance company also pays the claim, your health insurance company is going to ask you to reimburse them. So you can't get you can't get paid by two insurance companies for the same claim. So, you can get a portion of the bill paid by one company and a portion paid by the other, but you can't get 100% of the claim paid by your auto insurance and then get the same 100% paid by your health insurance company. All right, the one other thing I want to point out, tomorrow we're going to send you an email with a copy of the PowerPoint presentation, and probably right after November 15th, the PowerPoint presentation that we just did, or this whole webcast meeting, will be posted on our website at www.dcbinsurance.com. Again, www.dcbinsurance.com. I thank you for joining us today, and hopefully this will give you a lot of background information, so when you go to select a plan, it'll make the process a little bit easier. Thanks, have a great day, and we'll talk to you soon.